Hello, I'm joined by our Head of Funds Management, Ross Lees, and our Head of Transactions, Andrew Essey, to discuss some predictions we believe will emerge over the course of 2021. Across the macroeconomic environment, the equity markets, especially the REIT sector, and general real estate transactions.
Jason, let's kick off. At the start of 2020, I don't think anyone could have predicted Australia would have entered its first recession in 29 years. What's your outlook for this calendar year at the economic level?
Yeah, look, we believe Australia's handled this health crisis as well as any other country in the world. I think we're very well positioned for growth leading into this current year. And I think it's very encouraging that Australian Treasury has forecast growth of 4.5% for 2021. So I think we've got a pretty good year ahead.
We now have historically low interest rates. Do you believe they'll remain at this level or increase through 2021?
Look, I think Centuria's house view is that we're going to have low interest rates for the foreseeable future. We've seen long-term bond rates move out over the last couple of weeks with the prospect of a Democrat-controlled House and Senate and potential for increased borrowing, spending, growth and potential inflation in the US. However, with the RBA coming out recently and saying they don't expect that, that 0.1% cash rate to move for at least 3 years, I think we're all going to enjoy low interest rates for quite a while.
So just with that low interest rate, the low cash rate of 10 basis points, that's obviously really helped stimulate our local economy over the last 12 months, along with JobKeeper and JobSeeker. There's a fair amount of discussion about those stimulus packages being rolled away. What do you see playing out there? What do you think might get rolled back and what will the impacts of that be?
Yeah, look, obviously the tapering of JobKeeper and JobSeeker commenced back in September, with them both to end in March. Initial data late last year after that commenced has been very strong, both for retail spending as well as labour force figures. The government spent huge sums of money already on stimulus, I think some 140 odd billion, and there's still another 112 billion to come. All the talk at the moment from the Treasurer is that he does realise that we do have to further stimulate the economy to provide the next stage for recovery. So I think that 112 billion that's forecast will be spent, which should be very encouraging for the economy and our growth going forward.
Having grown up in Baltimore, just outside of Washington, I followed the US election very closely and recently watched the inauguration of Joe Biden. We now have a new US president, which is likely to affect US trade deals. What do you think will happen with the China-US trade war legacy, and will this impact Australia?
We don't believe that tensions will totally disappear with Biden in the White House, but I think the main theme will be normalisation of relations between the US and particularly China. I think we believe Biden's policy will change from a sort of a tariff-dominated approach that Trump took to a more internationalist approach, whereby Biden will work with US allies to form a bloc to pressure China into reviewing their stance on things like intellectual property theft and product dumping.
And then what about now with the UK as well? Now that Brexit's done and dusted, more or less, do you think that there'll be any trade implications with the UK?
Yeah, look, I think it's a very interesting question. EU has been Australia's second largest trading partner for some time after China, and Australia will have to work with both the UK and the EU going forward. They're up to, I think, their 9th round of negotiations on the EU free trade agreement and the 3rd round on the UK trade agreement. So I think if it all goes to plan, those agreements should be able to hammer it out over 2021.